Well, good morning, everyone. I'm here again with my good friend Keith Murphy with Essex Mortgage. How are you this morning?
I'm great, Kelly. Thanks for having me again.
You got it. We're going to keep this super short because it is Friday, May 28th, and Keith has a full day of closings. That's right, closing loans. And I think you had mentioned that you've got about 50-50 purchase and refinance. So I know that even though we're in this COVID environment with stay-at-home orders, real estate being essential, people are buying homes and they are taking advantage of these super low rates to get refinanced. Is that right?
Yeah, that's 100% accurate. The opportunity right now with these low rates is, to improve the household cash flow if you already own a home, refinancing. Some are consolidating other debt at higher interest rates, such as credit cards, auto loans, into a low fixed rate, which average on a 30-year is in the low threes. Average on a 15-year is in the mid to high twos. And when you can borrow money at basically the rate of inflation, it's essentially free capital. And so, improving the cash flow and improving the financial future of these clients it's on fire right now. And it's not just refinance, it's just a quick, statistic. I like numbers. And this month, as of today, we'll end up with 4.66 million fundings for the month, and about 30% of the volume of that is the refi, but the number of units is 50%. So I think not only homeowners realizing this opportunity, but also future homeowners are realizing, like, gosh, if I could buy a house at these lower rates, what is my actual interest cost over 30 years compared to where rates were, 6 months ago in the fours? How much money would I save? When they see that savings, it's the market's red hot right now.
That's so fantastic. And I know that for so many people who are looking to get those debt consolidations, not because they're not pulling a bunch of cash out to necessarily go out and blow their money like we saw back in 05, 06, 07, but they're really being wise about getting the payments down. And then I'm sure you've been hearing, and I've been talking to people, they're throwing extra money at that loan. Even if they're doing like a 30-year loan, they'll say, you know what, my plan is I'm going to be putting 100, 200 extra a month toward my principal. So where I've freed up my cash flow, if I've got some money to, stash away, great. And then get my 6 months worth of, savings built up to be able to have my rainy day fund and then be able to start paying down extra on that mortgage. So I think that's really wise. I'm really glad. I know that it's really rewarding for you personally to be helping people that way. So, and I want to thank you for that.
Well, thank you. Yeah, the strategy for at least all of our clients is, we're going to help you get into the debt. So it's our responsibility to help you get out of the debt as quickly as possible. And to your point, running custom amortization plans for clients, like, hey, I'm in this new 30-year loan, my cash flow's improved, but what if I took that cash flow and what if I put it towards the principal? Like you're saying, like, where would my freedom point be? When would I be debt free again? And then they get excited and see, oh my gosh, just by taking those savings, I can turn it into an 18-year off instead of 30. Well, what if I did an extra 100 or 200? What would that do for me? And so bottom line is, we can customize these loan repayment plans in such a way that we hit their freedom point where they don't have a mortgage anymore. And as long as they stick to the plan, the math will work in their favor.
Right. And we do need to keep this really brief today because I know you've got to get going. But I wanted to just mention that real quickly. I know that we're doing Zoom meetings. I know you're probably doing a lot of your meetings by Zoom. And I want to let everybody know, keep watching because Keith and I have talked about just this very issue and how we're realizing that a lot of our clients, particularly our first-time buyers, have not had the civics lessons that we had in high school. So we're putting together a 5-part series about learning all about how you can leverage your savings, little bit at a time, as we were talking about earlier before we jumped onto this recording. The $3.50 cup of tea or cup of coffee from your favorite coffee store, perhaps Starbucks, is actually costing you maybe about $300 when you lose out on the power of compounding interest. So we want to do a class where we're going to teach you about that and teach you how to learn how to monitor your spending and be cognizant of where you can save, where you can cut a few corners in your life without, having it be a huge hardship and sacrifice. But, when you look at the bigger picture in the long run, that it's going to benefit you and your family so much more by making those few sacrifices in today's dollars for the long-term benefit. So I want everybody to know, keep watching. We're going to be putting out that content. Keith is an amazing teacher, and I really thank you so much for all of the people that I've referred to you who've helped you've helped, and maybe they've had to sit and wait for 6 months or a year or 2 years while they work on things, but in the long term, it pays off, and they're able to purchase a home or a condo and just be able to move forward in their life with that home ownership goal.
Yeah, and it's exciting to watch the transformation.
Mm-hmm. Yes.
Like you said, I think we're failing our children. We were failed as insofar as the financial literacy is just lacking in our school and education system. And you've got wood shop, auto shop, and home ec, but who's teaching you about money? And as I learned, luckily, at a very young age, money's either going to work and serve you, or you're going to work to serve your debt or money. So you got to decide, which side of the fence you're going to be on. And when you see the power of exercising a plan and being disciplined with your money and allocating it and putting it in places that it's going to grow to serve you later, it's so exciting. I'm really looking forward to this series we're going to put together. It's going to help a lot of people.
I think so too. And that's what it's all about. And so we'll look forward to seeing everyone back here next week for more interesting and informative and timely information about the mortgage and the real estate market. In the meantime, we're going to be putting together this series, and we'll be putting it out to you, and you can share it, and we'll put it out on Facebook, Instagram, and be able to invite any of your young adults and your high school kids or even junior high kids. I know for me, I started working when I was 12. So it's not to say that, kids are out there working. And so how can we help them be able to provide for their future life? And so really looking forward to that. Keith, I know we'll wrap it up right here. So you've got to run, and take care. Have a great week, or the great rest of your week. Get those fundings taken care of for all your happy clients. And we will talk to you next week.
All right. Looking forward to it, Kelly. Have a great day yourself and a great weekend, everybody. Bye.
Thank you. Bye-bye.